Welcome to this episode of the Harpreet Singh Show. In today's segment, we'll talk to Mr. Atul Tiwari. He's from Toronto and he heads a division of a company which deals in a portfolio of $2.5 trillion. It's a great honor to have him today on the show, and today we'll be talking to him about how far the global economy is improving, and especially the Canadian economy, and what should be kept in mind when we have to do some investments. Let's welcome Mr. Atul Tiwari. Welcome to the program.
Thank you for having me, Harpreet.
Pleasure having you. Thank you. So how long you have been in this field of investments?
I've got about 20 years of experience, and really I've obtained that from various companies, banks and asset management focused.
So presently you're working with one of the topmost companies in the world, I would say. So because of the recession, what we saw in the market and especially in the United States, what impact that had on big companies like yours?
Well, our company's actually done very well through the recession. We managed $2.5 trillion worth of assets for investors around the world.
Right.
The recession has actually brought a lot of focus to things such as cost in investing, and we're known for providing low-cost investments.
Okay, so let's talk a little bit about the global economy as far as the situation is concerned. What news we are hearing from states, it's good news that the economy started recovering. And of course, once United States economy recovers, there's going to be an impact in Canada as well as across the world. So if you can take us into that journey, what were the basic reasons why the economy, there was slump in the market, and especially we know that sub-mortgage crisis, but was that the only reason with your experience, or there was something more to it?
Well, there was quite a number of factors that have worked together to create the financial crisis. As you say, there was a mortgage issue with subprime mortgages in the U.S. There were some regulatory issues that needed to be addressed, as well as some structural issues around, say, credit rating agencies. So all of these factors combined created a crisis that, as you know, the governments and central banks have been fighting for now coming on about 5 years.
Right.
And basically where we are now is that we're still in firefighting mode,
right.
But we can talk a little bit about some of the very positive things we're seeing around the world as some of the stimulus is working its way through the system.
But is stimulus an answer to keep the economy moving, and for how long do you think? And especially in Europe also, what we find is again and again stimulus has been given, so some kind of resuscitation is found. But overall, do you think that this is the right approach?
Well, it has been, Harpreet, and I think if central banks and governments had not taken action, we quite likely could have seen a depression similar to what the world saw in the 1930s.
Okay.
And so some very good steps had been taken by the right players in the market, but as you saw from the Federal Reserve's comments yesterday, the markets are a little worried that the stimulus is going to stop.
That's right.
And although for most people you would say the U.S. economy is strengthening, the Federal Reserve has said growth will be stronger next year than they originally had thought.
Right,
and
around 3% they're expecting. Is it a good growth, do you feel?
This is good, because you probably need to see about 2.5% growth before unemployment starts coming down.
Okay.
And so what the Federal Reserve is saying is that we think that the economy is going to grow fast enough that unemployment is going to start coming down, and to get to about that 6.5% level that they're hoping for by the end of 2014. So that's good news.
As far as unemployment is concerned, as you said, they want 6.5% threshold. Is it a good threshold, or isn't it too much also? Shouldn't it be less?
Well, 6.5 is not a bad percentage to be at. Of course, you want it to come down a bit more.
Right.
But there is a number where economists will tell you there is essentially full employment. And that's probably somewhere in the 3 to 4% range where there'll be a number of folks who may not want to be fully employed, et cetera. So you're always going to have some unemployment, but at 6.5, that's not a bad target to work to.
Coming to Canada, what's the situation here? The stimulus package was introduced by the government, and where we stand with 1 to 2% of growth, where are we heading for?
Well, Canada is still in fairly good shape. As you know, house prices are stabilizing and rising again slightly. In May, we created 95,000 jobs, best month in 11 years.
Right.
So, the rates are still low here. Everything seems to be ticking along nicely, but future growth is going to depend on two things. One is business investment,
Right.
and the second is exports. And so a lot of that is tied to what happens in the U.S. As you
Right.
know, 70% of our trade is with America. So with the U.S. picking up, the underlying economy getting stronger,
Right.
this is going to be good for Canada. Together with our weakening dollar, our exports should rise.
Okay.
And this will create more in terms of jobs and growth in Canada.
People are a little bit afraid because when it comes to investment, a lot of Canadians feel secure in investing in the real estate. But the crisis, what we saw in States, is there any chance of that kind of thing happening over here? And also, if not, why do you think that way?
Well, I think the government has done a very good job in Canada of managing the housing situation. So, we've seen prices come down slightly. We've seen some sales coming down slightly, although they've stabilized nicely right now. I don't think we'll see the same sort of crash that we saw in the U.S.
Right.
because of the fact that we have a number of different structural things in our system. We don't give mortgages out to people who don't have jobs or addresses. Right. We're very careful that way. Our banks are careful. So we won't see it the same way.
Right.
The one thing that we need to be careful of, though, is that Canadians still carry too much debt.
Right.
And a lot of that is from mortgages.
That's right.
And so right now, with the interest rates being where they are, that's not as big of an issue. But over time, late 2014, say early 2015, as the central bank starts increasing interest rates, that's where we have to be careful and make sure that people haven't taken on too much debt.
Right, and when you talk about the increase in the rates, especially the mortgage rates, do you think that it can go quite high or just a kind of a percentage point up and down, it'll remain that way?
Hard to tell, but if Canada follows the U.S., it should be gradual, and again, that will be a good thing.
But that is what we have been seeing. It has been always that Canada has been aligning its thoughts with U.S., whatever is happening over there. Nevertheless, let's come to the investment part, the interesting part now, in which you specialize.
Yes.
Now, when it comes to investments, as I said, people in Canada or even in the world also feel that real estate is a major place where they need to invest. What other options are available and are they secure? Because people burned quite a lot when the recession took place, and their money in bonds, stocks, they really had to face some troubling times. What would be your suggestion?
Again, I think there's a few important principles that are always true in investing. Number one, be diversified. And so you wouldn't want to put all of your assets into your home.
Right.
You need to diversify. And that includes not just being diverse from an asset class standpoint, but also geographically.
Right.
So that's one. Number two, you should take a look at your entire portfolio and determine what asset allocation is right for you, for your risk, for your objectives in life,
Right.
and stick with that asset allocation. So for example, if it's 60% equities, 40% bonds, you should look at that and periodically rebalance to make sure you stay at 60-40. And then the last thing I would say from an investing standpoint that's very important is that when you are buying stocks or bonds or funds or exchange traded funds, it's important to look at the cost of investing. Because over time, if you're paying high fees for investing,
Right.
that's going to eat into your returns and give you less for your retirement, for example.
Right. Thank you very much. It was a pleasure having you for all this information, what you have shared today. Thanks a lot.
Great. Thank you, Harpreet.